I think you'd see silver at a new all-time high in US dollars. It's already there in every other currency. We are consuming more silver than we're producing. So I see a situation where as industry is consuming more for solar panels, for the war machine, electronics, electric batteries. And I can see us in the future mining 4-to-1, 3-to-1, 1-to-1. And it's why there are some speculators and investors that are calling for $300 silver.
We're at the Precious Metals Summit in Beaver Creek, Colorado. This is a very special conference where the cream of the crop of the mining industry gather every year in September. And this September in particular is very special because this is the first time since 2011 that silver has hit $40 an ounce. It happened just last week. And so kicking off our coverage is Shawn Khunkhun, CEO of Dolly Varden Silver, somebody who's been a regular on my show, who's been calling for higher silver prices. Check out our last interviews, links down below. But Shawn, you've been right. Congratulations and welcome back.
Thanks for having me, David. Good to see you.
$40 an ounce hit faster than a lot of people expected. I know a lot of people were calling for $50 an ounce, and that seemed impossible just over a year ago when silver was just trailing $25, $26 an ounce. It's up about, we were just talking offline, it's up about 35, 40% from $29 an ounce since the beginning of the year. Your stock, Dolly Varden, was up more than 70%. So a good, strong year for silver and better year for miners. Let's just talk about silver first.
Sure. Well, look, I've been following gold for 2 decades professionally. And what I saw in recent years was the gold price was hitting record all-time highs in all currencies except for the US dollar, if you went back to a few years. And then that phenomenon occurred in the US dollar. So right now, the same can be said for silver. In every major currency, let's take our Canadian dollar, for instance, the price of silver is at a new all-time high. It's only in USD that the price hasn't moved beyond the old $50 high. I suspect that's coming. We've got a very, very tight market right now. If you look at the LBMA, if you look at where inventories have come down to, if you look at the demand for the industrial side of the metal and the monetary demand, we are in a very vulnerable moment right now. We are 50 million ounces away from a price squeeze. You know, if you look at inventories and if you look at how the product is hedged, there's really, if somebody were to take 50 million ounces on delivery, I think you'd see silver at a new all-time high in US dollars. It's already there in every other currency.
How did that $50 million number come about?
So look, I've been tracking inventories on major exchanges. If you look at the LBMA, inventories are going lower and lower and lower and lower. And then if you look at how the bullion banks hedge out their positions, it leaves a net 50 million ounce inventory. So
You're talking about above ground stock.
Correct. So if somebody were to come in and buy 50 million ounces of silver today and call for delivery, I suspect we'd see a new high in the price.
Can you just put 50 million ounces into context for us? I mean, what does that mean relative to total global demand as a percentage?
Yeah, sure. So on an annual basis now, we're consuming about 1.2 billion ounces on an annual basis.
Yeah.
We're mining about 850 million ounces. We're recycling another 150. So on an annual basis, there's about a 200 million ounce deficit. And that deficit is a deficit that we've seen for about the past 5 years. So, 50 million ounces in an 850 million ounce market on an annual mine supply basis is significant, particularly considering that we are consuming more silver than we're producing.
Right. And so let's just take the 50 million ounces of deficit that we're talking about here. Who or what entity potentially could be drawing from that demand?
Well, I think what you're seeing is as more generalists come into the space. Silver historically has been a metal that once gold has put in a big move. And we've seen, gold and gold equities really outshine almost every other asset class. As that trickle down occurs and as the generalists come into the space, they're often priced out of gold. High net worth retail investors, Gold is almost unattainable for the average investor, whereas silver isn't. And so as those speculators and precious metals enthusiasts come into the market, they gravitate more to silver. And that's why I suspect in this next leg of the bull market, like we saw back in mini bull markets of 2020, 2016, major bull market of 2011, silver dramatically outperformed gold.
You've actually said in a recent interview somewhere that silver is rarer than gold. What do you mean by that?
So look, I believe that if we stopped mining gold, for whatever reason, all the gold we've ever mined, which only fills up 2 Olympic-sized swimming pools, vanished, we could function as a world without gold. But we couldn't. It would be highly disruptive if silver was taken out of the equation. And so if you go back to history, there is a 16 to 1, silver is 16 times more abundant than gold. But because over this last 5,000 years, we've been mining and mining and mining, we're now at a point where we're mining 7 to 1, not the natural relationship of 16 to 1. So we're mining, for every 1 ounce of gold we mine, we only mine 7 ounces of silver. And again, the silver's being consumed. And because of the price, because you've got a 90 to 1 silver to gold ratio, we're not recycling silver in the same manner at the same percentage that we're recycling gold. So what I see is a situation where as industry is consuming more for solar panels, for the war machine, for electronics, electric batteries. I just see us getting to a point where that silver demand, I can see us in the future mining 4 to 1, 3 to 1, 1 to 1. And it's why there are some speculators and investors that are calling for $300 silver.
Yes, the market doesn't seem to reflect this sentiment, though. We're talking about 100 to 1 for the gold to silver ratio. We're near to 100 to 1, even though, like you said, the mine ratio is near 7 or 8 to 1. What do you make of this big difference here?
I think we've been in a universe where it's been central banks that have been buying gold. And really, apart from 2 recent central bank purchases, central banks have not been known to buy silver. So I think, the central banks have been buying gold. The market really hasn't come in and caught a bid under silver, which is why I still think we're in the early innings of this gold bull and precious metals bull market. GDX, which is the index that owns the major gold producers, just on Friday of last week, finally got back to its 2011 high. Gold was at less than $1,900 when it hit that 2011 high. Gold today is over $3,500 an ounce, and the stocks have just gotten back to where they were 14 years ago. If you look at GDXJ, which is the junior miners, they still have another 50% to go before they replicate their 2011 high. Silver equities have actually done better than the junior golds, but they haven't done as well as the senior golds. Now, historically in bull markets, both silver and silver equities drastically outperform gold and gold equities.
GDX has actually not just outperformed the underlying bullion, it's outperformed the S&P this year. In fact, last year when you and I spoke at the Vancouver Resource Investment Conference last January, actually it was earlier this year, but even earlier this year, the theme was why have the miners not caught up with gold? That was the beginning of this year. Since January, the theme has dramatically shifted. The narrative has shifted, and now the question is why have the miners moved so quickly, so fast, when it was lagging all throughout 2023 and 2024?
Well, I think the answer is the best performing stock in the S&P 500 is Newmont. And so if I'm a portfolio manager, if I'm a fund manager, and I see how well both the gold price has performed, but also the Agnicos, the Newmonts of the world, I have to own them. I have to take my 1% allocation to the commodity complex, and I have to increase it to 2%, 3%. So when you and I were talking in January or in previous years, that trickle down, the big companies like Agnico today is earning $300 million of free cash flow a month. Yeah. So these higher metal prices are impacting the bottom line of the major producers, and that's having a trickle-down effect. It's having investors come in and chase the sector. It's having the large cos start investing in the junior cos. We're starting to see increased M&A in the space, and we're just seeing that trickle-down effect. But again, early days in this next move.
So the gold price, for example, let's just take gold. The gold price has been steadily climbing since the beginning of 2024 to now $3,600 an ounce, which in itself is unprecedented. So just going back to the miners, all throughout 2024, the miners have been down, if not flat. And then all of a sudden, the GDX is now at $66 a share. It started the year this year at 35. So that's roughly a 90% increase year to date, not even over the last 12 months. Was there something the industry did this year that attracted capital in 2025, whereas that didn't happen in 2024?
Look, I think the market wants to see a pattern. They don't want to see the anomaly. So once you put together back to back quarters, mining is an industry where you're depleting your resources. You have variability because certain parts of your mine may be richer than others. So to have that consistent cash flow, that consistent sustained growth. Also, typically, historically, analysts would use a 3-year trailing price when they factor in and model the share prices of these cos. As that trailing price has risen, we're now the inputs in the models are higher, not just for production, but also for future reserves.
So what's the cycle of the mining industry following a price rise? So first we've got the bullion underlying metals rising. Then we've got the stock of the metal companies rising. And then what's next? What do the companies do following the rising of both?
Good question.
Yeah.
So, look, if I've lived through it for the last 22 years, I've studied history. What I've seen is if I were to look at mining equities, you have the crown jewel of the mining industry, which is the royalty companies that almost work in any environment, bull market, bear market, right? But then when you go down a tier to the large producer category, that's where the market is right now. That category is done very, very well. Now the intermediates, if we go back to Q1, the best performing stocks in Q1 were those growing, smaller producer category, the emerging producer category. Now what we're seeing is the developers have caught a bid. Even the unfunded developers are now no longer trading at 0.1 net asset value. They're trading at 0.2. And so we've just seen a revaluation of the entire sector. We've even actually are seen a trickle down to the advanced explorers and the company with resources. You take Dolly Varden, for instance, a company that's not in production. We've seen our shares rise about 70% this year on the back of our large high-grade resource be revalued in this environment.
What does $40 an ounce mean for a company like Dolly Varden Silver that isn't producing yet? Are you taking this higher share price as an opportunity to raise more capital? Or are you drilling more right now with your existing cash reserves? Are you doing nothing so far? Are you dependent on the price cycle at all? What does this mean for you?
Good question. So look, I look at $25 silver as a marker where most of the industry is not incentivized to develop or explore.
Yeah.
$25. And we stayed below that price level. If you go back to April of this year, we were there for about a decade. So in that environment, we had to be aggressive and bold to go out and build a business in a time where we were in a depression. Now that we've poked our head through 25, it's an environment where our cost to capital is lower, right? So we went out and we raised money at the highest price we've ever raised it. We've used our revaluation in our shares to go and make accretive acquisitions. So we're getting bigger. We've increased our land package by 600%. We've gone from 2 past producing mines to 5. Raising money. We've started the most aggressive drill program in the company's history. We've got 5 rigs turning. We're doing a 55,000 meter drill program. And what that's translated into was last Tuesday, we put out a drill hole, 1,422 grams of silver over 21 meters. It's the best drill hole in the company's history. So, because we're in an environment where we can raise more money, we can take more shots on goal, we're having more success.
Yeah, the Golden Triangle is located in British Columbia, Canada.
Correct.
It's in a relatively safe jurisdiction. It's surrounded by good infrastructure. However, development in Canada has been slow, according to some complaints from investors. Prospecting has been slow, zoning as well as rights to land packages. That process has just been slower than investors would have liked. Do you agree?
I agree with the fact that
permitting as well.
Yeah, I agree with investors. We're in an instant gratification world, so investors want it yesterday.
Sure.
So I agree with you. But the reality is, BC, and again, it's taking a look at like Canada or British Columbia and talking about these big areas. It's really regional. And so when I think of the Golden Triangle, I think about the indigenous communities like the Tahltan and the Nisga'a, who want industrial projects. When I think of the permitting in British Columbia, we had the Artemis mine, which is propelled with the Blackwater mine, which has propelled Artemis to a $6-7 billion valuation. That was a mine that was permitted, that was brought in on time, on budget. Osisko Development's Caribou project was given the green light. Eskay Creek, the Skeena project is being advanced. So BC is advancing projects, but it's all regional. Does the community want it? Does the infrastructure support it? And so we've been very happy. The government has turned around our permits in a timely manner. As long as you're respectful to water and the indigenous communities, you get your permits.
2 years ago on my show, you told me in my first interview with you, actually, is that the risk of silver in the future is that it could be mined into extinction. In other words, there isn't enough to service rising demand. The logical solution is just to increase the output of the mining production. We can't do that just like that. We can't just turn on a switch and increase production. Or can we?
We can't, no. And the problem with silver is only 1 out of every 4 ounces comes from a primary mine. So in order to increase production, you have to go to the lead mines, the zinc mines, the copper mines, the gold mines. And so you'd have to incentive those polymetallic producers to get more silver. When you focus on the primary silver mines, they're often in jurisdictions that are not favorable. They're often in projects that are incredibly deep, need a lot of CapEx. The permitting timelines are long. We're in a situation right now where in Mexico, the world's #1 silver producing nation, where 70% of silver comes from open pit projects, the Mexican government has not been handing out new open pit permits. So if you think about the already tight market we're in, where we're seeing 200 to 250 million ounce annual deficits, and then factor in some of these political and social changes and more stringent permitting timelines, I don't see the outlook for silver in the future getting any better. Hence why I'm so bullish on the price appreciating.
Is the silver industry, companies and executives like yourself, doing anything to lobby the government to make changes?
Yeah, absolutely. We've got some pioneers in the space like First Majestic and Keith Neumeyer that is lobbying both the Canadian and U.S. administrations to make silver a critical mineral. So we are collectively working as an...
What does that mean functionally when silver is labeled a critical mineral? What changes can be made?
It depends on what stage your company is. If I take my company, for instance, we can leverage tax incentives.
Okay.
So we can minimize dilution, and we could take investment dollars and stretch them if we got those tax advantageous treatments. If silver was treated like copper, for every dollar I raise, I could potentially put $1.5 in the ground. So it's a way to minimize dilution, maximize exploration and development, and it's simply by reclassifying the metal critical.
Actually, Dolly Varden recently listed on the New York Stock Exchange, so you're opening yourself up to U.S. capital markets. What are you preparing for?
What am I
preparing for?
Yeah, look, it was something that I debated with my board for many years before we made the decision. There's things to think about. There's a higher cost of legal, accounting, the liabilities go up. So it wasn't something we didn't do without heavy debate. But my thinking was over 93% of North American capital is concentrated into the US. I spend a lot of time, here we are in Colorado. I spend a lot of time in the US talking to US investors. They cannot buy the Canadian listing companies. They need NASDAQ and NYSE listed codes. So we've opened ourselves up to the biggest market in the world at a time where precious metals are irrelevant and silver and gold are breaking out. So what I hope to achieve is, look, if I'm a US investor on the New York Stock Exchange, there are 10 ways to play silver. Dolly Varden is one of those 10 ways.
Yes. And then I guess with the additional exposure and presumably capital, does that expedite your timeline at all for
absolutely
drilling, exploration?
Look, the name of the game in the stock market is liquidity.
Yeah.
Right? We've seen our liquidity dramatically increase. Yesterday was a day where we traded 1 million shares in the US. That's $4 billion US. If you compare that to the Canadian listing, we did maybe 1.5 Canadian dollars. So already we're seeing volume, and we're seeing the market gravitate to that NYSE listing. ETF inclusion, index inclusion. That liquidity all helps. We're in a universe right now, David, where over 50% of money is passive, right? We are now able to absorb that passive money.
So you are opening yourself up to the potential of being majority shareholder takeover by, let's say, a pension fund or an ETF, or let's say basically your shareholder ownership structure. Would that change dramatically to the institutional side?
Well, we're already, before listing on the New York Stock Exchange, we were already 50% institutionally held.
Yeah.
We're starting to see the ETF and the index percentages tick up. We've already got 2 corporates that own 26%. Eric's brought at 10. What I'd like to see is our 13% that is in the hands of the public increase as well. We want to get exposure to family offices, high net worth U.S. investors, and it's important that we grow our shareholder base.
One major milestone from Dolly Varden over the next quarter that we should be watching for?
Look, it's all about growth. What I would love to come back on your program in the future, and bring you a company that is no longer just an advanced explorer, to bring in an element of production, a pipeline of development, exploration, and a portfolio of marketable securities. The way the great companies were built in our sector was through mergers and acquisitions and through drilling. We've done 5 M&A transactions in the last 5 years. It's time to be more bold, more acquisitive, and it is my goal to have Dolly Varden become a top 10 silver equity, and we are very close to realizing that vision.
Okay, well, the silver price is definitely in your favor. Good luck, Shawn. We'll speak again very soon. Thank you for coming on.
Thank you so much, David.
Follow Dolly Varden Silver, links down below, and check out Shawn's past interviews with me, also links down below. Take care, Shawn.
Thank you.